Hi guys, welcome back to today's video. In this video, we will discuss the 9% fall in the Avenue supermarket, also known as DMart. In this video, I will give you a clear insight on whether you should hold, sell or consider buying the stock. We will explore if this is the right time to take a fresh long position or if it's better to wait. We are also going to analyze the fall from both fundamental and technical perspective. Is it panic selling or is there any other reasons behind this drop? And what are the experts says about the stock? All of this we'll discuss in detail. So without further delay, let's jump right into it. Today, DMart stock fell by around 8.5% to 9%. Over the past months, the stock has dropped by 19.5%, and today fall coincided with the company's Q2 result, which did not meet the market expectations. When we look at the current issues faced by the company, lower than the expected revenue standouts, a deeper dive reveals that most of the DMart revenue come from the food product sales, but high competition from the online platform, especially in the metro cities, has impacted the income streams. The second reason for the downtrend is the drop in the revenue from the general merchandise and apparel sales, which also face a stiff competition. But the biggest factor in the decline is lower number of the new stores open in Q1 and Q2. Compared to the previous quarters, you might wonder how fewer stores can affect the stock performance. Well, DMart operates primarily as an offline business, so its growth heavily depends on the number of stores it's open. More stores means more revenue, which boosts the stock price. Another key point to address like for like growth, which was only 5.5%, down from 9.1% in the last quarter. To summarize, the revenue growth is slow, store expansion is lagging, and like for like growth is declined. In fact, this is the slowest revenue growth DMart has seen in the last 4 years, which explains the fundamental reasons for the stock fall. Now, let's move on to the technical analysis. Here we are looking at the DMAT on the daily time frame. We can draw a trend line and mark the key support levels. As you can see, the trend line has broken. Zooming in, we spot a strong double top pattern. Let's also mark the resistance and supports on the chart. The stock recently broke through one of the zone. If we zoom out, we find another resistance level, which is where the stock is currently trading. Now check the average volume. It's significantly higher compared to the previous days. Zooming out a bit more, we can identify another support zone. Switching to the weekly Switching to the weekly time frame, we can extend the resistance zone to the historical price chart and notice how well the zone is respected. We will mark it accordingly. We also extend the mid resistance zone and again it hold up well. On the weekly chart, we can see a strong trend line where the stock has taken support multiple times. We can When it comes to entry criteria, I do suggest a long position if the stock breaks the support zone and the supporting trend line and came to the 3600 levels or below. With a 5% of capital you can deploy at that level, and the next 5% of capital you can invest it when the current market price of the stock is came to 3300 levels. My expectation in the market will move sideways before continuing its downtrend. Eventually, consolidate at the support zone. From there, I anticipate the stock will gather liquidity and start moving up once the company current issue are resolved. What are the brokers says? JPMorgan has downgraded its rating from overweight to neutral and reduced its target price from 5400 to 4700. Morgan Stanley took more cautious approach, downgrading the stock from overweight to underweight with a significant target price cut of 5,769 to 3,702. Conclusion: if you are a long-term investor, you might consider holding the stock and adding more at the discount price if needed. You can, if you are a swing trader who entered before the fall, it's best to either square off your position or wait until the company issues are resolved. In my personal opinion, square offing is the better option. If you have not entered this trade yet, you can wait for a better opportunity or follow the entry strategy discussed in the video. Depend on your plan. Thanks for watching this video and have a great day.